Students, welcome to this session on business accounting. And today we're going to learn what are the different terms used while we do accounting. And the first one is assets. Now, what is assets? Asset is all that account or amount which you are invested, where you are getting output from that, you're earning money from that, you're getting income from that is called an asset. Like if you think about a travels business, and the travel, the car which you have is creating income for you, is generating income for you. Your car is taking passengers to different locations and for which you charge and you earn income. So car is asset for a travel company as well as a private company. So in assets, then we have three types of assets. First is fixed assets, then we have current assets, and third we have fixed assets. So what is fixed assets? What does a fixed mean? Fixed word means the value of asset during the year remains constant. It doesn't change by this. Like in the business, cash keeps on changing throughout the day. Suppose I started my business in the morning with 1,000 rupees cash, and if I sell goods, my cash will increase. So this keeps on fluctuating throughout the day, and that is what is not a fixed asset. So fixed assets is like in 1 year, usually the amount is constant. It will change only when we sell a part of that asset or we buy a new again asset in line with that. So fixed assets are those assets which has got a constant value from for a financial year starting from 1st April to 31st of March. So that is a fixed asset. So it is a constant value starting of 1st April until 31st of March, which doesn't keep on changing. That is fixed assets. In fixed assets, we have tangible and intangible. Tangible means the asset that we can feel, we can touch, or your tangible assets. So assets like we have land and building, we have furniture, we have motor car, we have cash. All these are examples of tangible assets. Those assets which we can touch and feel are called as tangible assets. Land and building, furniture, plant machine, cash, goods, inventory are examples of tangible fixed assets. Then we have second category in that is intangible fixed assets. Intangible means assets which has got a long life, but we cannot touch that. We cannot feel that. And the examples of intangible fixed assets are goodwill, trademark, copyright, patents are the examples of intangible fixed assets. So this patents is what is patents? Patents is the intellectual property. You have created a new what do you say goods, or you have created the same good with a different combination, or you're using less of raw material. So your invention is your what do you say is your asset. If you've written any film story that is your own story, that will be copyright. Nobody can copy that film story. If you composed a song or you're composed some lyrics, that is again comes under copyright. An author has written a book, that book cannot be copied. That is his property, that is intellectual property, that is intangible assets. So intangible fixed assets are those assets which we cannot touch, but has got a life, which has got a value, and from which we can derive money, we get income. It's called as intangible fixed assets. What is goodwill? Goodwill is the name and fame of the company. Because of the name and fame of the company, you are able to attract more customers. You are able to attract new employees in the organization. Like we talk about Tata Motors, we talk about Volkswagen, we talk about Wipro, we talk about Infosys. These are very good names or brand names in the industry, in the whole economy. And because of even if tomorrow Tata starts what do you say travel business, people will definitely believe in that brand because they deliver value. So because of the Tata name, if they're able to sell mobile handsets tomorrow, is because the company name has got, it is a goodwill. So intangible assets are all those assets which we are not able to touch and feel, but then it has got some value. And they're also called as IPR, intellectual property rights. We have learned the first type of asset, that is fixed assets. Now, second is your current assets. What is current assets? All those assets which we held in the business for less than 1 year are called as current assets. So the cash that you have in the business is your current assets. Cash that you have in business is your current assets. Sorry, here it will cancel. So cash is fluctuating, changing every time. Your goods is your current assets. Your debtors are your current assets. Bills receivable are your current assets. Anyone who is non-commerce student in this class now? Anyone who is from non-commerce background? Hello? Is it anyone who is not from commerce?
Yes.
Sir,
What's your name?
Sir, Michael Vishwakumar.
Yes, Michael, you're not from commerce. Anyone else from who is not from commerce background?
sir, me, home but
Om, but okay. So, Om and Michael, what is current assets? Assets which we held for less than 1 year are called as current assets, where the value keeps on changing. The cash keeps on changing throughout the day. So it is a current asset. The goods. Now, what are debtors? Debtors are all those parties to whom we have sold goods on credit. So when we keep on selling goods, the debtors will keep on increasing. When they make payment to us, it will keep on decreasing. So there's a continuous change, fluctuation in the value. Those are current assets, and the holding period is less than 1 year. Then we talk about bill of exchange, that is bills receivable. If we have taken promise from the customers, a promise on paper that they will pay us money in by 30 days or 60 days, that promise on piece of paper is nothing but bill of exchange, and it is called as bills receivable. That comes under your current assets. Then third type of asset is called as fixed asset. It is just a name asset. If you try to sell these assets, you will not realize cash. You are not going to realize any cash from the sale of such type of assets are fixed assets. Like example, we have prepaid expenses. So prepaid expenses are though asset, but we are not able to realize money from that. It is fixed asset, only a name that it is an asset. Then we have preliminary expenses. The expenses that we have paid for forming a company is called as preliminary expenses. When you form a company, then you have to pay the legal charges, you have to apply to the government, you have to pay the fees and everything. All these expenses are collectively together called as preliminary expenses. So that also comes under the category of fixed assets. Or insurance claim. If you're taken an insurance and something goes wrong in your factory, there is a theft or fire, or there's a flood, water coming in where you have lost your goods and you've incurred financial losses, you want to claim from the insurance company. And if the insurance company says, okay, we'll give you, they've accepted your claim, that is fixed asset, because that is only the amount that we're going to get, not the entire money from that. That is fixed assets. So we have main two categories. One is assets and second is liabilities. What is liabilities? Liabilities, all that we owe, all that we have to pay or we owe. So what is that we have to owe? Again, that we have two things. One is current liabilities and then we have long-term liabilities. Current liabilities are liabilities where we need to pay. We need to pay less than 1 year. Less than 1 year is called as current liability. Now, when people are working in your organization and they're called as employees, and as per the different rules we have, like Payment of Wages Act or Minimum Wages Act and everything, you have to pay to the employee within the next month by 10th of the next month. Suppose January you have employed a person, by 10th Feb you need to pay the money as per the rules. So there is an obligation that you have to clear the payment in less than a particular 1 year. Those liabilities are called current liabilities. So the expenses which have been incurred but not paid, like the salaries, wages, rent, are termed as current liabilities. Then we have current liability. One more example is creditors. So we have purchased goods on credit and we need to pay them, and usually we don't pay beyond 1 year. The stuff that we have bought, raw material from different suppliers, are called as creditors, and we need to pay them in less than 1 year. Otherwise, if you pay them more than 1 year, tomorrow they will not supply goods to you. Might be they supply, but then they will charge you extra for that. So you need to pay the creditors in time so that next time you have a very good rates that they will offer to you, and they will give you a good quality material maybe. So current liability is all that obligations that we owe and we have to pay in less than 1 year. तर काय आहे करंट लायबिलिटी? करंट लायबिलिटी ते देणं आहे जे व्यवसायामध्ये व्यवहारापोटी जे आपल्याला 1 वर्षापेक्षा कमी कालावधी देणं गरजेचं आहे. त्याला 1 वर्षापेक्षा जास्त विलंब करून चालणार नाही, आणि जर तुम्ही असा विलंब केला तर किंबहुना तुम्हाला तुमच्या खर्चामध्ये या ठिकाणी भर पडणार आहे. दॅट कॉस्ट विल गो अप. If I don't pay my suppliers in time, they will charge me interest, they will charge penalties, and that will increase my cost. And if the cost is increased, my profit will go down by distance. So current liabilities, all that obligations we need to pay, but the payment is less than 1 year. We can't keep it more than 1 year. Then long-term liabilities. It is like, we can pay this more than 1 year. We can pay more than 1 year. So what is long-term liability? You have taken a loan from bank to construct a factory building, and which you have to repay after 5 years, or you have purchased a machinery which we have to pay after in a time span of 5 years. That is long-term liability. So any liability, any amount that we owe and we can pay after more than 1 year, up to 5 years or 10 years maybe, that liability is termed as long-term liability. Liability is the amount that we have to pay, and any amount, any account which we have to pay, which where the amount can be paid more than 1 year, is called as long-term liability. And any liability less than 1 year is termed as current liability. Are you with me, students? Students, are you with me?
Yes.
Very good. Yes.
Yes, sir.
Yeah. Now that we have understood what is liability, what is assets, third point is what is capital. So capital is all that money with which one starts business. One starts business. So if you want to start a business, you require money, and that is nothing but capital. So capital could be in the form of cash, or could be in the form of plant and machine also. Let me support this with an example. There's one Mr. X, okay, who has got a very good location for a business, and there is one Mr. Y who is a very good mechanic. Now that Mr. A is ready to offer his location place to start a garage with Mr. Y, so Mr. Y will give money, and Mr. X has offered his land or that location for business. So Mr. X contribution is the land. It is also capital. So there is no hard and fast rule that capital has to be in the form of cash. It could be in the form of raw material. I'll give a very common example. It may sound cheap. There are two friends, and one has got a very good location, and second person is a farmer, and there is sugarcane in his farm. And now they want to start a juice center. So the person who's got a good location will contribute his premises as capital, and the other person who is a farmer will contribute sugarcane as a raw material. So even that raw material of sugarcane be considered as a capital in the business. So capital can be in cash or in kind also, my dear students. कॅपिटल म्हणजे भांडवल, ही रक्कम ज्याने आपण व्यवसाय सुरू करतो, आणि कॅपिटल ही कॅश मध्येच असलं पाहिजे असं काही नियम नाहीये. मग या ठिकाणी एखाद्याची जागा आहे, स्वतःची कोणाची मशिनरी आहे, किंवा एखाद्या व्यक्तीकडे रॉ मटेरियल आहे, हे घेऊन सुद्धा तो व्यवसायामध्ये कॅपिटल घेऊन पदार्पण करू शकतो. ही कॅन कॉन्ट्रीब्यूट अ स्टार्टअप बिझनेस. दॅट इज कॉल्ड एज कॅपिटल. Whatever capital has been invested, that is a liability for the company. So capital is a liability for the business where the capital is pumped in. Next point is proprietor. Proprietor means single owner, sole owner. When there is a business and when there is only single owner who enjoys the ownership and management and the profits, he is called as a proprietor. So any business where there's a single owner, he is the alone person who is enjoying the profits. He is the one who is bearing the risk. There's no other person to share his risk. He's called as a proprietor. So proprietor is a single owner company. A single owner in a business is called as proprietor. A proprietor can be a male or female. A proprietor can be a young person or even an old person. So proprietor is one person who is the owner of who is a single owner of a business, where he is the alone person who is taking the decisions, is managing the business, and whatever profits are being earned, he is the alone person to enjoy the profits, and tomorrow, God forbids, if there's losses, he has to bear the losses also. A single person enjoying, taking decisions, managing business is called as a proprietor. The fifth concept that we have to learn is drawings. So what is drawings? Drawings is the amount. Drawings is the amount, cash amount or bank amount which the owner has taken out from the business. It could be in the form of cash, it could be in the form of goods also. So any cash or goods taken out from the business for personal use is termed as drawings. And when there are drawings in the business, what happens is your capital goes down. The more drawings, the more capital will go down. Now that a person has brought 50,000 as capital and has withdrawn money of 2,000, his capital will stand at 48,000 because initially he had 50,000 capital. Now they have taken out 2,000 as drawings. So his new balance of capital would be 48,000. So drawings is the amount withdrawn by the owner from the business for his personal use. It could be the form of cash, it could be the form of draw, it could be also form in the material or goods is called as drawings. So drawings is the amount withdrawn by the owner from the business. Now what is the revenue? Revenue is the all amount that you have collected or you have earned on account of sales. So you're manufacturing goods and selling, and what amount you receive is revenue. So revenue is the income of your business practice. Revenue is all that you earn from the business. And what are the expenses? All that money you spend and against which you don't know, you get a particular thing is called expenses. Expenses like we have paid for telephone bill, we have paid rent, we have paid interest, we have paid salary, we have paid wages, we have paid your postage bill, you paid for postage, you have paid for raw material, that is purchases, are examples of expenses. So what is expenses? Expenses are the amount spent on getting a benefit or utilizing or taking some services are expenses, like we pay rent, wages, salary, postage, advertisement, discounts given, commission given, traveling, audit fees paid. These are called as expenses. Now that we have again income, so income, like I'm selling goods and earning money, that is my revenue. But if I'm investing money in shares, what I get is a dividend by this. That is income. If I've invested money in bonds and debentures, I get interest, that is by income. So revenue is all that money that I have collected by way of sale of goods, and income is that I have got benefit from the investments. What is losses by this? When your income is less and your expenses are more, in that case, what happens is we have lost. Your income is that you have earned money of 1 lakh by account of sales of goods, but the expenses that you incurred is 1,20,000. Your income is 1,20,000, expense 1,20,000. My dear students, you have earned a loss of 20,000. And in accounts, losses indicate into bracket figures. It is not indicated as minus figures. Sorry. In accounts, loss is indicated into brackets. So if the amount mentioned in bracket, that means it is a loss of 20,000. So losses are that losses happens in a situation where your expenses are much more greater than your income and your revenue. And this could be the reason, like we have COVID pandemic situation where we are paying the rent, but then we are not operating any business. Then about the employees, our factory is closed, but still as per the government rules and orders, we need to make the payment to the wages. And then there is no income, but expense happening, that is called a loss. So losses is where your income is less and expenses are more. Then we have 10th point as purchases. 10th point as purchase. What is purchases, my dear students? So purchases is all that money. Aditya Nath, can you please mute yourself? So what is purchases? So purchase is the amount we have spent on buying raw material by the students. We have spent the money on buying raw material or other things which are required to manufacture a product. Now we take example of Maruti. We take up an example of Maruti car. In Maruti car, what are the purchases? The steel, the tires, the battery, the engine, the oil that we require to make a car sellable is purchases. So purchases is all that we are procuring raw material or bought out items. Suppose that I take example of an inverter company. So I can sell inverter only when I have a battery with it. So many people buy the things in a set. So inverter machine and battery together is one where we can boost ourselves. So if I'm buying battery from some other, I'm buying switches, I'm buying the motherboard and the different electronic configuration I'm manufacturing. So that is my purchases. I'll give very common example like mango pickles. So I'm purchasing raw mangoes. I need oil, I need flavors, I require many different spices. That is the amount spent on buying all this is purchases by district. So if I'm manufacturing furniture, then I'm purchasing plywood, I require Fevicol, I require nails. The amount paid on buying all this stuff, because of this stuff, my table is being getting manufactured. So this amount paid for procurement of such type of material is accounted in the account called as purchases. Is it very clear, students, what is purchases? Now that what is purchase returns then? Whatever amount, whatever material I desired that I wanted to utilize during my manufacturing process, if the material is not as my desired expectations, I will return back. I've asked my supplier to send me Fevicol and I wanted 10 kg packets because I find it cheap. And that the supplier is sending me 1 kg packets, that is too costly for me. I understand that he's selling 1 kg packet because he's getting little extra profit from that. At the same time, I understand that if I buy 1 kgs, it will be costly and my profit will go away. So I will return that 1 kg Fevicol packet back to the supplier. I will ask him to send 10 kgs. So what material I purchased and sending back for n number of reasons is called as purchase return. So we return the material which we have purchased because he has sent us excess quantity, or I have asked him to send blue and he sent me red color, or I have asked him to supply the material at 5 rupees, he's supplying me at 5 rupees 50 paise. I will not accept that. I will return back. I want the material at 5 rupees. It was already been discussed, negotiated, and he was supposed to supply the stuff at 5 rupees. But then after discussion, he's dispatching the material with the invoice of 5 rupees 50 paise. I will not accept that. Such items which he has dispatched me at 5 rupees 50 paise, I will return back to him. Or if whatever material he has supplied to me, if it is faulty, it is not working properly, why should I keep? I will return back to supplier. So all that purchases I have done and which is not in good order, I return back to the supplier is termed as purchase returns. Are you with me, students? 10:30, 10:40. Problem होता है मेरे यांच्या 1 minute. Hello. Your next term is sales. What is sales? All that raw material you're converted into finished goods and selling is called as sales. All that material, that raw material converted into finished goods and selling is called as sales. So what is sales? Sales is all that material you are giving to suppliers on maybe cash basis or on maybe credit basis, and from which you are earning money, that is revenue. So sales is all that goods which you are purchased and sold, or it could be like you are a departmental store or you are a shopping mall where you're not manufacturing. So you're buying in bulk and you're supplying in small quantities. So that is your sales. So sales could be conversion of raw material finished goods and selling is sales, or you're buying in bulk quantities and selling in small quantities also sales. And sales are on two bases, cash basis and credit basis. What is cash basis? You supply material and you get cash immediately is called as cash sales. And the material that we sell on credit means you're not getting money immediately is called as credit sales. So credit sales is like we are selling goods and then we are collecting the money after expiry of 60 days, 30 days is called as credit sales. So this both is accounting something to call as revenue. You're earning money from that. Now, what is sales return? Likewise, when you are returning material back to the suppliers, same way, if we have supplied wrong material, faulty material, defective material, then what will happen? That will come back. That is called as sales return. So whatever material we have sold, and if it is not accepted by the customers, they're returning back to you in accounts, it is called as sales return. So this happens because we are supplying accidentally defective material, or we are supplying excess material, or we are not supplying as per the order, or maybe we have supplied late even if we supply late material, the customer may return back to us. So these are the reasons why there are sales returns in the business. Next is stock. What is stock? Stock is all that raw material, semi-finished goods or finished goods that we have in business. So at the end of the day or at the end of the year on 31st March, whatever material is lying in your organization, it may be raw material, semi-finished goods or finished goods, is called as stock. Is called as stock. Then we have debtors as one next concept that we have to learn today. Debtors. What is debtors? Debtors are maybe individuals, maybe partnership firms, maybe private company, maybe public company, to whom we have sold goods on credit. Sold goods on credit. We have sold goods on credit. So debtors are all those individuals and partnership firms, private and public companies where we're selling goods on credit to them. And that is why they're called as debtors. They will pay money, but in future. They will pay money in maybe after 30 days, maybe after 60 days, after 90 days. That is why they're called as debtors. Then what are creditors? We have purchased material. We have purchased goods or raw material from different suppliers on credit terms, where you're going to postpone the payment. You're going to make the payment after 30 days, 40 days. And those all suppliers who have supplied you goods in accounts are called as creditors. So creditors are all those supplier companies, individuals, where they have supplied goods to us on credit and we owe money to them, is called as creditors. Is called as creditors. Are you with me, students? Hello?
Yes, sir.
Okay.
Yes.
Now, very good, very good. So next is what? Solvent. What is solvent? Imagine that you're taking a salt in your hand and then you're dropping in the water and then you stir. That salt dissolves. Means there is no existence of salt in that water. Solvent. What is solvent, my dear students? A person, a company, an individual, or organization where they have enough of assets to pay their liabilities is called as a solvent company or solvent organization. कुठली एक बिझनेस जी आपल्या बिझनेस मध्ये जे काही देणं आहे, जी काही लायबिलिटी आहे, ती देण्याची त्याच्यामध्ये धमक आहे, तेवढे ऍसेट्स आहेत, त्याला आपण काय म्हणतो? सॉल्व्हंट कंपनी म्हणतो, सॉल्व्हंट पार्टनर म्हणतो, सॉल्व्हंट पर्सन म्हणतो. So any person who has liabilities, okay, but then he can manage his liabilities, he can pay the liabilities, is called as a solvent company or solvent partner or a solvent person. Then we have next is voucher. Voucher is a document, my dear students. Voucher काय आहे? Document आहे. And what is a voucher then? When you buy any stuff, you buy a cell phone, you buy a car, what is that company giving you? An invoice. So invoice can be a voucher. When you go to a post office and you make a, what do you say? You want to do a speed post, they give you a small receipt, that could be a voucher. So voucher is any document where you are narrating a financial transaction. You are narrating a financial transaction is called as a document. Narrating any financial transaction is called as a document. Any document which narrates a financial transaction is called as a voucher. If I've gone for office work to Pune and I have taken an auto, now auto person doesn't give me a bill. In that case, I myself will write on a voucher. I went to Pune to meet the chartered accountant to discuss about the advance tax payment, and I had paid 83 rupees to the auto fellow, and I will sign on that I have received the money, I paid the money. That can become a voucher. So voucher is any document which is supporting or giving us a narration about a financial transaction. Vouchers are different types: purchase voucher, sales voucher, cash voucher, bank voucher. So as per the nature of transaction, there are different vouchers by this. So if you're paying cash, you will prepare a cash voucher. If you're making a bank payment, it will be a bank voucher. If you're purchasing goods for manufacturing purposes, you will prepare a voucher called as purchase voucher. So vouchers are different depending upon the nature of transaction. And voucher is one important evidence if tomorrow there is a dispute. So voucher is a document, it is the evidence if there is a dispute by disputes. So vouchers are documents which are stored, filed properly, date-wise, sequence-wise, and as per the nature of transaction. So you'll have a different voucher file for purchase. We'll have a different voucher file for sales. This is your documents, which is very important in accounts. That is what vouchers. Yes. Then we have invoice. So what is invoice and what is voucher? So here, sometimes we consider invoice as a different thing, but it can be a voucher also. What is invoice? Invoice is like, we buy purchase goods and what we get is a purchase bill from the supplier. If today I purchase a laptop for my organization, and if I go to Vijay Sales and when I purchase a laptop, they will give me an invoice. So invoice is a evidence of documentary evidence where particular goods are sold or purchased. Now that I'm using a telephone for my business, then the telephone bill is not an invoice. It's only a bill. I'm utilizing the services. That I'm utilizing my, if I'm consuming electricity in my business, I'm getting power bill, light bill. That is not an invoice. So invoice is about a particular tangible thing that has been supplied or bought. That is called as invoice. So invoice is like we have credit invoice. What is credit invoice? When I've purchased or sold goods on credit, it is called as a credit invoice. Then what is a receipt? What is a receipt? So receipt is again a document evidence where it shows that we have received money. It could be a cash receipt or it could be a bank receipt. When I receive money, cash from any of my suppliers, and he wants evidence that I've paid money, I will prepare a cash receipt. My dear students, when you have taken admission in the college, you have paid fees to the college, and the lady, that is Ranjana madam, had issued you a small thing, and that is a fee receipt. So receipt is a acknowledgement that amount has been received. Receipt is an acknowledgement. Lecture you gonna go. So receipt is a document where I have received cash or bank. So if anyone is tendering check to me, I'll issue a receipt to it. That is a bank receipt. The next is capital profit. Oh, that is very something important. So that suppose I'm into trading business, I'm buying, suppose laptops at 20,000 and I'm selling the laptops at 22,000. So I'm earning profit of 2,000 rupees. I'm into business of selling laptops, my dear students. I'm in the business of selling laptops. That is my revenue, that is my profit. What is capital profit then? Capital profit happens when I sell my asset, my dear students. Suppose that, I'm into consulting business. I'm providing training. And in that training business, I have laptop with me, I have projector with me. Now, these are my assets, my dear students. And when I'm selling this laptop or projector at a higher price than what I purchased, and I get little extra money from that, is called as a capital profit. So when I'm earning profit on sale of asset, is called as a capital profit. Are you with me, students? Understood?
Yes, sir.
Yeah, but when I'm selling
Yes,
laptops,
sir.
what that is my business. So laptop for me, when I'm selling laptops, is goods for me. But when I'm a consultant, I'm a trainer, then that laptops is my asset. So when I'm selling asset at a higher price, what I earn is a capital profit. What I earn is a capital profit. So this is your 21 concepts that basically we need to understand when we are talking about accounting, when we deal with accounting. Yes, I request all of you to go through this 21 items and ask me any doubts on that. Students, is that you want me to repeat any of these points, please? First was your assets, then we learned what is liability, then we learned these different items. Please go through that and request. So I'll repeat one of the topics. We have next 2 minutes with us. Students. Hello. Hello. Students. Please respond. There are 26,
Yes,
25
sir.
students and no one is responding. Janvi.
Yes,
जानवी
sir.
जानवी तुम्ही माझं पुस्तक घेऊन गेला लायब्ररीचं तुम्ही अजून परत केलं नाहीये.
हो सर, मी गावाला आली.
एक मिनिट.